Yeah, my name's Raj Work. I'm managing director with WestUrban Capital, and yeah, here to present and to Austin Taylor and everyone at Integrated-Equities and all of the investors. So I thought what we would talk about today would be I could talk about just a little bit of background about WestUrban Developments and our investment program. We could talk about some of the current market environment and how we're reacting and moving in this environment, and maybe what we see going forward. Third, we could talk about some of the project updates that that Integrated-Equities has invested in with WestUrban, and then we can close it by talking about our next project that's coming up to launch. So WestUrban Developments. WestUrban Developments is a merchant builder of apartment buildings, and we're so what that means is we bring in third-party private equity. We pair it up with construction financing. We build an apartment building, lease it up, and then we exit. And the exit is either a sale or long-term CMHC financing. Our market niche is 4 to 6 story wood frame purpose-built rental buildings. So we don't do a series of duplexes or townhomes, and we're not doing concrete high-rise. We have our very specific niche that we stick to. Typical project size is about 100 units a building, but we have had some variance as low as 50, as high as over 300. But for the most part, it's about 100 units a building. Our development footprint is mostly in British Columbia. So the 3 regions in British Columbia are Vancouver Island, Lower Mainland, specifically Fraser Valley, and then the interior of British Columbia. Opportunistically, we will look at deals outside of British Columbia. So for instance, we have projects underway in Calgary and Winnipeg, and a project that will be launching soon in Ottawa. But for the most part, British Columbia-based developer. We're based on Vancouver Island with offices, our head office in Campbell River, offices in Nanaimo, and then the office that I run, our capital platform, based out of Victoria. We've completed 27 projects since inception. We're representing over 2,000 units. So speaking a little bit about the WestUrban program and some of the advantages that we bring is first, vertical integration. So when I mentioned how our typical project is about 100 units, at any one time, we typically will have about 1,000 units under construction. So very large, especially by Vancouver Island development standards. So 1,000 units is about 10 projects, very large, very large set of projects to oversee and manage. So we have about 140 employees, and we directly manage everything from the land acquisition all the way to the exit. So at land acquisition, we have a team of ex-city planners who are very good at estimating what's the most that we could build on the land so that we don't overpay for the land. Nothing worse than thinking you could build 150 units on the land and you only build 100, then you've already paid more per door than you need to. So we've had that. Also with the expertise as former development managers, they're very good at pushing our project through the entitlement process. So that's the zoning, development permit, and building permit. And as you know, in these projects, time is money. At the construction stage, I think a very interesting part here is we have ownership position in a number of sub-trades. So it really helps us. It really helps us maintain, our budget and our timeline and quality. So those are really 3 key things you're looking through for in the construction process, especially at riskier times in a project, which is typically the front end where projects can get into, a little bit more problems. So for instance, we have ownership positions on excavation and concrete trades, as well as trades later on, such as electrical. So we don't get below market pricing. We'll get market pricing, but we also get access to trades in a timely manner. The full team get that part of the project done, very timely manner, high quality manner. So it's really, I think, important for the consistency of our projects. And then after the project is built, we have an in-house leasing team, which will lease the assets. My team responsible for capitalizing each project. And then at the end, I'll speak about this in more detail later, but then at the end, as we lease up the asset, we can put on long-term CMHC financing, and then the asset becomes cash flow positive, and or we can exit and sell to a third party. We alluded to this earlier, but in terms of projects track record, we've had 16 projects sold and over 500 million to institutional buyers. So we've had sales and portfolio sales to some of the largest groups in the country, such as Starlight and CapREIT and Killam REIT, and a number of other large institutional buyers. Project support. So this kind of talks about how our investment program works. So each program, and it's maybe in contrast, comparing, thinking about the prior presentation where it's a fund and you invest and it's long term. This is different. This is you're investing in a limited partnership, a project limited partnership to build a specific building. And so each project is its own limited partnership. The investors are the limited partners, and they put in the equity for the project, and the WestUrban is the general partner. And then we, as I say earlier, that we build the project, lease it up, and then exit. Unique to maybe WestUrban on these is a typical project is, you buy the land, you wait about 2 years to get the entitlement. So as I said, that's the zoning, the development permit, and the building permit. Then it's about 2 years to build, and then you exit. WestUrban will typically buy the land and take it through that whole entitlement process. And so we'll bring on the investors when the project is building permit, or as they say, shovel ready. So you're really cutting out half of your investment duration. So instead of 4 years, it'd be 2 years to completion. So that's one differentiating aspect. Another differentiating aspect is WestUrban takes on the construction risk or the guarantees on all of the construction loans. So we're not asking our investment partners to provide any guarantees. And then third, in the event of any cost overruns, WestUrban would be the ones to pay that bill. So there would be no cash calls to investors. So I think an important part to highlight is it's a finite specific amount that an investor would invest into the limited partnership, and then that's it until completion. Actually, maybe I'll go up a little bit. So I can also talk about, I had mentioned about the track record and our investor return. So of our projects completed, 27 projects, 16 sold, and then the balance are either leasing up or either under construction or then leasing up, and then we're waiting to get a sale, or we've decided to hold long term with our investment partners. Market challenges. So, what I thought I would do here is talk about the current market environment and then how we're performing in this environment. So in contrast to maybe 3 or 4 years ago, it's not as tight of a market as it was then. Rental demand has been moderated in the near term due to slower population growth, and there's elevated levels of new supply that have been delivered last couple of years, and a little bit into this year. So you're seeing vacancy rates rising from historic lows, still below average long-term vacancy rates, but higher than the historic lows of earlier years. What we've seen is we've leaned on a couple of aspects to successfully navigate through this environment. Is one, generally, purpose-built rental is an asset class that always has some liquidity to it. There's always a market to find a tenant and to lease up a building. So the absorption continues to be strong. And then specific to WestUrban, every market we're in It's a newly built building. It's the best or among the very best top tier in that market. And so we're finding in our projects, we've enjoyed really, really successful absorption rates at or above our investment pro formas in all of the markets that we've been building in. So what we found is our leasing successes often come at the expense of older buildings. So even as the market would loosen, as new assets, as I say, the best in class, we're enjoying successful absorption and leasing. And then finally, once the asset is stabilized and we're able to put on long-term CMHC financing, CMHC insured financing, all of our assets become cash flow positive. And then for those who don't know, CMHC financing is federal government insured financing. And so this is financing that typically will have very favorable and low interest rate and long amortization. So it really allows the debt to enhance the returns for investors. So this is maybe evidence of the strength of our product in this market. And thank you, Austin, for stealing my thunder and speaking to this at the introduction. But it's in my slide deck, so I will speak to it. So we were very happy to have closed on the largest multifamily sale in the history of Vancouver Island in Q4 2025. And this is a 336 unit 4-building transaction for 160 million. And as Austin provided the spoiler on, it's the largest multifamily transaction in Vancouver Island history. So I think evidence that our program is able to be successful in this market. And then in terms of the future outlook, there's, I think, a number of reasons to be optimistic. New construction launches are at multi-year lows. Supply pipeline will, as a result, decrease materially beyond 2026, and then the potential for demand to stabilize over the medium term. So you can definitely see with some of these kind of near-term challenges, it's definitely leading up to a supply challenge. And I think that'll be very beneficial for people invested in the multifamily asset class. So this is, in terms of our program, this is how the distribution scenario at completion. So looking at the top box there, once we complete a project, we'll typically obtain lower interest rate bridge financing to lease up the asset. They call it stabilizing when you get to a high enough percentage of the units leased. And that's the stabilization period. And at that point, we can either transact the sale to a third party, or we can go for long-term CMHC insured financing that I spoke about earlier. And then even once we obtain long-term financing, we can still pursue a sale. It's just once you're in that long-term financing, the whole project is cash flow positive. And at that point, we can also then distribute cash to our investors. So once we get the long-term financing, we have to pay off all of our financing debt and then have some operating capital. So you have to put money aside for things such as property tax, et cetera. And then the rest we can distribute. So this is the third item I thought I would speak to, is just to talk about the status of 6 projects that Integrated-Equities has supported WestUrban on. So the first one is our project in Duncan, 107 Evans Street. We've substantially leased the building, so 130 out of 137 units are leased, rents exceeding pro forma. And notably in there is, in a lot of larger markets, you need to provide incentives for the tenants to get new tenants. So typically it'll be 1 or 2 months free rent. Evans was we exceeded our pro forma and zero incentives provided to tenants in that process. So really, really strong market receptivity, which we found in a lot of secondary markets throughout BC. And then we are recently, I think about 8 days ago, approved for a long-term CMHC financing. So that process will take another 3 or 4 or 5 weeks, but then we'll be into a really favorable capital position on that project. Second project is our is in Kelowna. 2 buildings you see there in the picture, 192 units, and we're very much approaching stabilization, which, you know, subjective number, but kind of in that 75 to 85% lease rate is maybe not stabilized. Stabilized would be in the 90s, but at this point, then we can start to move to either sale discussions or long-term financing discussions. So our rents are meeting our pro forma. We have a bridge financing in place, so lower interest rate while we get to stabilization. Our third project is in Vernon, and this one is fully leased, so really, really successful lease up. The market absorption was very strong, very similar to Duncan. Rents also exceeding our pro forma. And this one, we had a CMHC construction loan in place, so then it just pivoted to a CMHC term financing loan. So this one is already cash flow positive. Our fourth project is in Salmon Arm, also recent completion, so October 2025. A very strong lease up, over 70%. As well, rents exceeding our pro forma, which I think speaks to, you know, what I mentioned earlier, you know, new product, highest quality in the region. So getting good rents and absorption. We have a bridge financing in place, and we're approaching stabilization. And then the last 2 projects are projects that are under construction. So one in Cranbrook that's pushing 60% complete, that we're projecting completion in August. And then the most recent one is 2082 Souk Road, Colwood. So this is 2 buildings, 149 units, and situated right across from Royal Roads University in Victoria. And this one's kind of early days, but we'll complete not this summer, but next summer. And then finally, in terms of our upcoming projects, we have one project in Colwood. The address is 3501 Olympian Way. And this is a 1 building, 90 units, 6-story wood frame, so right down our alley. And this will be launching in late summer. And this one is situated at the Olympic View Golf Course. So it's right nestled into the golf course. It's situated a little higher on a higher topography, and it has wonderful views of the Olympic Mountains in Washington State. So that's kind of what we're looking for in a lot of our projects, especially in, you know, a larger city like Victoria, is something unique and special. So the earlier project I mentioned in Victoria, that had a really, I think, special location, literally across the road from Royal Roads University. And then this one similarly, I think has a really cool special location with its, you know, proximity to the golf course, which is, you know, very pleasant, as well as the views, unobstructed views of the Olympic Mountains. And guys, that is the conclusion. I'm happy to take any questions, but of course, you know, we're really, really appreciative of all the support that Integrated-Equities and its investors have provided WestUrban over the past 3-4 years. And so I'm happy to take questions now, but also equally happy, you know, if you want to ask questions subsequent to this, I would always be happy for a phone call or a video call with any investor in Austin and Taylor.